Hello, Mike Swanson here. I just want to do a really fast video for you because I'm getting lots of emails about the stock market. We've had a correction for 7 days now, and yesterday the Dow fell 100 points. The Nasdaq, I think, was down over 20 points. Now, those aren't really shocking drops, for one single day, but the thing is, those drops have come after about 6 days of selling. And there's been calls from different people in the media for a stock market crash even. Nouriel Roubini got some playtime in CNBC saying that we're on the verge of a reverse dollar trade that's going to cause the market to crash. And Art Cashin basically said the same thing Tuesday. So a lot of people are worried, but I'm here because I want to tell you that now is the time to be buying stocks and not the time to be selling stocks. And let me show you why. First of all, yesterday I believe was a panic washout. And if you look back the past 10 years, when we've had little pullbacks in bull markets, they tend to be like 5 to 6% pullbacks, which is exactly what we've seen from the high the other week. The S&P 500 has dropped about 6.2%. And in the bear market of last year, we'd see the market fall for sometimes weeks at a time. And then you'd have basically a panic washout day, and the market would reverse. This would happen last year in the bear market. You see the market drop for weeks, then bam, you'd have the panic washout. And then in the last bull market, you'd see the market have these 6% corrections. They come to an end when you'd have these panic washout days. And even in this current bull market, the same things have occurred. If you look back this past month of October, right at the beginning of the month, we had a panic washout day, and they came out on that day and told people to start buying. In fact, I did a little bit of buying then. We also had a panic washout day in July, which led to a big rally. And yesterday was another panic washout day. And how do you define a panic washout day? How do you know when it's happening? Well, it happens when the VIX jumps 10% or more. Go to Wikipedia and look that up. I don't have the time to go through everything in detail because I got to give you this information fast. You had the put to call ratio close above 1, meaning more people were buying puts than calls. That means more people are hedging themselves, hedging their positions because they're fearing further declines. And 90% of the orders on the Nasdaq and New York Stock Exchange were sell orders, which is a sign of really relentless selling. And you had that happen in October and all these other panic washout days I mentioned. Now, yesterday that didn't quite happen. It happened with the Nasdaq, but not with the New York Stock Exchange. But I'm going to need to do some further checking into this, but I believe that's because there are just like a handful of stocks, penny stocks basically, that were skewing the orders there. But definitely we saw it on the Nasdaq, and I think that was enough. Definitely 80% of the stocks were down in the New York Stock Exchange too. So yesterday to me was a key textbook washout day, and we should be expecting to see the market trade higher over the short term and probably test its highs. Now it's possible we'll see the market come back down and test yesterday's lows. Let me talk about what I think is going to happen in a second. But first I want to show you the key support levels that were hit. We have a nice trend line support area that's defined the bottom of the S&P 500 during this bull market, and you can see the upper resistance line that was hit just a few weeks ago, and we've come back down to support. So we can expect the market to trade back up to the upper resistance trend line here. And I think what we're going to see happen is we could see the market test yesterday's resistance level. If you look in July, we had a bottom, then a bounce back up, then a new low. Same thing actually happened. It's hard for you to see on this chart, but same thing happened in the September-October correction. You had the market come down, come back up, and test the low. But I think that's actually less likely that we're going to see significant new lows here because we're hitting support, and we've had this panic washout here. In September, the panic washout didn't happen right here, but it happened in October. Same thing here. No panic washout here in June, but it happened in July. But I do think it's likely we're going to see the market not just blast off to new highs and go nuts, but instead test the high, get to about the 1100 to 1090 level in the S&P 500, and come back down and go sideways a little bit in November, because I'm expecting some sort of breakout of this resistance level in late November or sometime in December to lead to a big rally going into the end of the year in the first quarter next year. The thing is, it's not just the S&P 500 and Dow and NASDAQ that are lined up like this, but other stock market sectors. For instance, you look at gold stocks, we see gold stocks are now on their support trend line, and that means now is not the time to be panicking out of them either, but thinking about buying them if you're interested in gold stocks. But anyway, I want to give you this quick video and sum up my views of what's going on right now, because I know a lot of people are looking at this, a lot of people are worried. Odds are you're a little shook up over what's happened. I want you to know now's not the time to be shook up, but to hold the positions that you have, and if you're not in anything, to be looking to do some buying, and be talking to you later.